Buying your first home is an exciting time, but it's also one of the most significant financial decisions many people make. Hi, Realtor Jeff Rising here. Check out these 10 tips that can help you navigate the home buying process and avoid some of the most common mistakes while you're shopping for your first home. Number 1, looking for a home before applying for a mortgage. When you're buying your first house, you might be tempted to view homes before speaking to a mortgage lender, but in today's tight market, not having a mortgage pre-approval in hand when you view homes can lead to sellers not taking your offers seriously. That's because sellers won't want to take the risk on someone who isn't certain they can get financing for that price, especially if they have multiple offers on the table. Also, from my experience, sellers only want pre-approved buyers touring their homes. I mean, really, who would you want to pack up your kids and pets and drive around for an hour to show your house if people looking in your closets aren't really ready to buy? I wouldn't. Number 2, fixating on the house over the neighborhood. Sure, you want a home that checks off all the items on your wish list and meets your needs, but buying purely based off of a home's cosmetics can be short-sighted if you're purchasing in a neighborhood that you dislike or an area that is too far from work or school. You've heard it before, so say it with me: location, location, location. Number 3, waiting for the unicorn. Unicorns are mythical creatures in nature and in real estate. One of the most common first-time buyer mistakes is looking for a home that is 100% perfect. Searching for perfection can narrow your choices and lead you to pass over good, suitable options for starter homes in hopes that something better will come along. We advise our buyer clients to focus on the 80-10-10 rule. Find a home that gives you 80% of the things you want, like a 1-story, 3-bed, 2-bath home, 10% of things you can change, like an outdated bathroom that you can update later, and 10% of things you can live with, like having a detached garage versus an attached garage. Number 4, making decisions based on emotion. Selecting your first home is not just a financial decision, but it's also often an emotional one. It's only natural to have high hopes and dreams about the house you'll buy to make your own. The key is to avoid letting those feelings deter you from being practical when it comes to your budget and long-term goals. Your budget should be one of the primary factors that inform a purchasing decision. Emotional decisions can lead to overpaying for a home and stretching yourself beyond your financial means, so be conscious of your budget and stick to it, and don't let your agent show you homes above your preferred price range. Number 5, talking only to one lender. Shopping around with multiple lenders for a mortgage is an often overlooked step in the home buying process, especially for first-time buyers. But skipping this process can be costly. Comparing offers from various lenders allows you to snag the most competitive rate and loan terms. Even a small difference in the interest rate can amount to thousands of dollars saved over the loan term. The more you shop around, the better basis for comparison you'll have to ensure you're getting a good deal and the lowest rates possible. So be sure to consult with at least 3 different lenders since rates change frequently. Aim to get rate quotes in the same day to compare rates, lender fees, and loan terms. Don't discount customer service and lender responsiveness because both play key roles in making the mortgage approval process run smoothly. Number 6, being careless with credit. Your credit score is a key part of making homeownership dreams a reality. A mortgage lender will check your credit report when you apply for the mortgage pre-approval and once more before closing to ensure your financial profile hasn't changed in the way that it impacts your ability to repay the loan. An important thing to know is, as a first-time home buyer, is that any new loans or credit card accounts can jeopardize the closing and final loan approval. Buyers, especially first-timers, often learn this the hard way. For pre-approval to closing, avoid making any significant changes to your finances, including opening new credit cards, closing existing accounts, or making large purchases on existing credit accounts. Pay down your existing balances to below 30% of your available credit limit if you can, and pay your bills on time and in full every month. You need to wait to buy all that new furniture until after closing, and that goes for cash purchases too. Any large cash deposits or withdrawals from your bank account will raise red flags for your lender. Number 7, overlooking FHA, VA, and USDA loans. Hopeful first-time buyers might find it challenging to save up for a down payment on a home in the current market. If you have little saved for down payment or your credit isn't stellar, you might have trouble qualifying for a conventional loan. So you might assume that you have no other financial options and delay your home search. Look into one of these 3 government-insured loan programs backed by the Federal Housing Administration. For FHA, U.S. Department of Veterans Affairs, VA loans, and the U.S. Department of Agriculture, USDA loans. Here's a brief overview of each. FHA loans are 3.5% down, VA and USDA are both zero down loans. Number 8, buying more house than you can afford. Stretching your budget to buy a home that you fall in love with is another first-time buyer mistake to avoid. With the high home prices and mortgage rates, sticking close to your budget and not overextending is especially important. A higher mortgage payment means you'll have less room in your monthly budget for other bills and expenses. Being house poor can also crowd out other opportunities such as funding a retirement account, a children's education fund, or saving for a vacation. Focus on what monthly payment you can comfortably afford rather than fixating on maximum loan amount you qualify for. Just because you can qualify for a $300,000 loan doesn't mean you can comfortably handle the monthly payments that come with it. Number 9, draining your savings. Spending all or most of your savings on a down payment and closing costs is one of the biggest first-time buyer mistakes. Draining your savings account for large down payment can cause problems later if and when things go wrong with the house. You just never know when that water heater will go out, for example. Aim to have 3 to 6 months of living expenses in an emergency fund even after you close. And number 10, overlooking the hidden costs of homeownership. One of the most important things to know as a first-time homebuyer is that owning a home costs more than you think. Beyond your principal and interest payment, there are other things to consider, like your taxes, your homeowner's insurance, other monthly bills, utilities, things like that come up. Some of these are included in your payment, but if your taxes and insurance go up next year, guess what? Your payment goes up along with it to adjust and cover those bills. Plus, don't forget about common maintenance and other upkeep costs. If you're just starting to consider buying a home, be sure to save this video and watch it later. Have a great day and happy home shopping.